Good afternoon. Today is January 15th, 2016. My name is Joe Terril, President of Terril & Company, private wealth managers in St. Louis, Missouri, with approximately $700 million in discretionary assets under management. We're going to today try and do a little bit of an update on why the volatility in the markets, why the horrible start to the year 2016 in investment markets, give you an idea of what it is that investors around the world are worried about and whether we think those worries are justified or not. As always, helping me with these blogs are Brian Curtis. And Brian, when you're ready, let's switch to talking about the investment markets. In a nutshell, investors all over the world are worried about the continued dropping in the price of crude oil. Crude oil today is $29 and change per barrel. The reason for this concern is everywhere around the world, people are worried about oil companies that may go broke, banks that may have too much in loans to oil companies, and how this may affect particular countries in addition to third world countries that are too dependent upon oil prices. Said another way, in 2008 and 2009, the world went through a complete credit crunch where the world economy ground to a halt because investors, bankers, financial people everywhere were concerned about who had how much exposure to the mortgage markets and the real estate markets. And until that all got sorted out, literally economic activity ground to a halt. Investors are worried right now that perhaps the low price of oil might create a repeat of 2008 and 9, where banks stop lending to other banks and people get over concerned about whose exposure to what there is in the oil, natural gas, and the energy industry, and even into commodities such as iron ore prices and copper prices, etc., that are also falling. The fears are that this could create a severe recession around the world, and therefore the knee-jerk reaction is sell everything, run for the hills, batten down the hatches, and today the market's down another 400 points as this happens. So with that said, that's the reason for the market activity. We at Terril & Company do not see this happening. Oil prices are going to be volatile. Oil prices right now are being held as a hostage to political maneuvering and political actions in the Middle East. You have Sunni Muslim moderate countries that are pumping all the oil they can, intentionally driving down prices in order to use it as a political battle against Shiite Muslim countries that they are at unofficial war with. So, said another way, it's a little bit like saying Iran and Russia, who has jumped into the middle of it, are creating too many problems for Saudi Arabia, Kuwait, and etc. So as they drive down the prices as a way of trying to bankrupt Russia, bankrupt Iran, the entire world is feeling the effect of this. I don't believe this will go on forever, and even with them pumping all out, I do not believe that the price of oil is going to go to $10 a barrel or $5 a barrel, as some of the most extreme pessimists believe. And consequently, we do not think we're going to have a repeat of 2008, 2009, where the engines and the gears of the world grind to a halt. With that said, we have, since last November, been very defensive in our investment positions. We are somewhere between 20 to 25% invested in stocks when the year began. We have changed portfolios in the last 10 days to where our portfolios are somewhere around 15% exposed to stocks. Now, I'll be the first to say, with even 15% exposure in markets that are going down this way, that's too much. But we're in a very defensive position that we think is warranted at the moment, and we're probably going to stay there for the immediate future. Not because we think the world economy is going to fall apart, but because until this little mini panic is over, we think it's well warranted to stay very defensive. Ultimately, there are going to be some great investment buys in this market as people are indiscriminately running down the price of every investment. So this is just a short way of trying to explain what the markets are concerned about, why this constant sell-off, and we do not agree that we're getting ready to repeat 08, 09, but we're certainly repeating past periods where investors around the world are in a panic. There is a little bit of validity in the scenario that some of the OPEC countries that have perhaps 10 years worth of earnings in the banks in London are being forced to sell some of their investments to quote unquote live off of while they're fighting this political battle by trying to drive the price of oil down to bankrupt each other. So there could be a little bit of that, but until it plays out, we intend to stay very defensive in our positions, and ultimately, if we do our job right, we're going to be able to go from 15% perhaps back to 30-35% in more aggressive investments, only we'll be doing it and buying things at a very discounted price. So for now, that's a fast update as to what we see happening, why it's happening. I want to repeat again, we don't believe oil is going to $10 a barrel. We could be wrong, but do not think that's going to happen. Do not think we're going to see worldwide bankruptcies all over the world of anybody that's got anything to do with the energy business. So, Brian, I appreciate your help, and with that, let me sign off. My name is Joe Terril, and I'm president of Terril & Company in St. Louis, Missouri. For the benefit of our clients and other ones who follow our opinions, if anything changes, we'll be back with an updated report, and we thank you for joining us this evening. Good night.